Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
Good morning, everybody. This is Michael coming to you from GammaEdge on Friday, August 18th. Happy Friday. We have OPEX today, so we'll be looking through some charts. We're going to do a pre-market morning strategy session. We'll be looking at the tick and how we have been structuring our market model for the past week when the tick started showing weakness and turning off, and then we'll look at the 0 DT expiry for today and kind of see how the structure looks. So let's go ahead and jump right into it. So here we have the PM settled, all expiries turned on via the purple tiles over here to the right. We've been looking at the structure changing to out of the money and in the money put dominated really for the past week, which we are above and below spot price, still in the money and out of the money put dominated, obviously negative gamma conditions. We did see the expansion of targeting of 4350 and 4300 from Monday into Tuesday. So that turned just a little bit more bearish, thinking weakness and targeting those levels. As of pre-market, we're actually below 4350, so seems to be playing out pretty well so far. Significant amount of net delta sitting there, negative GEX there, total OI. We've highlighted these purples with the total OI strikes that are the highest areas. Again, 4300 on the downside is a significantly important area for the PM settled all expiries. We'll look at the confluence between some other charts, but 4350 to 4300 is going to be extremely important. We do have the quarters sitting there at 4325, which could provide some possibility of small demand, but 4300 the downside would be a significant level to reach. Again, so we'll watch how this kind of plays out today, but this is all expiries for the PM settled. Here's 0 DT, so this is what we have expiring for today. I'll draw your attention really quickly to the transition zone, 4385 to 4405, spot price 4370. We'll roughly be opening right around, right below this 4350 level. We do have positive net deltas come in. These are in the money calls for 0 DT. Again, not a significant amount, but we do have those positive in the money calls and net deltas. So this could provide us some sort of supportive type action, at least on 0 DTE. We'll be watching the vol-u-vol-d command at the open to see what the targeting looks like. I'm anticipating some sort of supportive action into here, just due to expiry and put expiry. Any move back to the upside may be stifled with this transition level up to obviously 4350 and then 4370 to 4380. We would at least have to get up to that level to have any sort of thought of moving higher. You'd have to see these in the money puts erode very quickly and get taken over by calls. Again, we'll watch that on the vol-u-vol-d command. But so we'll see how this reacts. I'm going to anticipate some stalling as we pull down into this 4330, 4335, unless we see significant targeting below that. Then that would lead us to 4300 as we discussed on the SPXP. So again, we'll watch the commands intraday and see how this looks. But again, in the money, out of the money put dominated, but we still have some in the money calls for 0 DT that could provide us some supportive action as we go throughout the day and the expiry. Here's Monday, obviously plus 1 DT, so we're still in the money, out of the money put dominated. You can see that after today, erosion of those in the money calls very quickly, and those puts below us, out of the money puts, come in all the way down to 4300 and actually 4280. So the landscape for Monday still looks very cautious, very weak, put dominated into Monday. So we'll again see how that changes today with expiry. Transitions all the way up here at 4420 to 4445. So really not much up there to give us any bullish case back to the upside, unless we see a lot of these puts decide to close Friday into Monday. But again, in the money, out of the money put dominated, negative deltas, really very weak structure for Monday also. Here's the balance for next week, Monday through Friday. Again, in the money, out of the money put dominated, weak structure, really nothing else to say about that. 4300 really continues to look like a targeted level there. 4350, this was as of spot price yesterday, but then transition is wide here, 4415, so we'd really have to start getting above 4415 and start capturing some of these in the money puts here, and these would mechanically have to start closing for us to start moving back to the upside. But you can just see we're stacked above and below spot price and really all the way through here for next week for negative net deltas. So the crystal ball for next week is still pretty negative, more weakness unless we see the structure really completely change. So really not any more rosy outlook I can put on that for next week as of now. So again, subject to change, all to be determined. But again, more weakness possible next week. I think we have Jackson Hole next week, some other FOMC stuff coming out. So we'll see if that changes any of the sentiment and structure. But as of now, put dominated, negative delta, and weak looking structure. Here's 0DT, all expiries expiring today. You can see where those positive net deltas come in. This is where I'd be looking for supportive type action, demand type action, significant amount here. 4,300, 11 billion, 4,325, 3 billion. These are in the money calls below us for 0DTE, again for combo complex. So we do have a possibility for this to be supportive and move back to the upside. Probably not a significant move back to the upside just because of all these negative net deltas and in the money puts above us, unless we really get a complete mechanical closing. But I would be watching this 43.50. If we open below it and start to move back above it, then the possibility to move higher comes into play. And again, if we start moving lower below 43.25, we still have these in the money calls that will probably slow our descent down to 4,300, and that'd be a significant level to the downside. Tick, again, we've been discussing this for the past probably week and a half, 2 weeks. New lows have been outpacing new highs for almost 2 weeks. Negative slope on the market model, colored ribbon turned off back here. That told you to get net delta short or at least close out your longs. Shorter term time frame, white bolded line CT, still below all the moving averages, and actually ARCX, this is railroad track down. Understand what that means in the tag combos. It's all in the back testing there. And actually the ARCX expanded significantly to downside, plus 1,000, minus 1,000 filtered tick. Institutional selling continues to show selling, really no buying towards the end of the day. And cumulative tick continues down, minus 180,000 at the end of the day. That's significant, so we'll watch these numbers as we go into today. If we want to see any sort of change back to the upside, cumulative tick would need to flatten out. You need the moving averages to flatten out, and cumulative tick start taking back at least the shortest term moving average and start moving a slope back to the upside. As of now, we can't even get above the previous day close or even a high of the day. So this will be kind of the two marking points. You need to get above previous close, which would be here, get above and stay above that, and then you need to start getting above a high of the day and finish at the highs for the CT. ARCX, again, I could expand this out, but it really expanded to the downside into the afternoon yesterday. Railroad track down, negative slope now, coming in pretty significant, red below cyan. Market model turned off roughly back here, 8:15, but we already started seeing the cross back into the colored ribbon and negative slope. CT living below the colored ribbon causes this negative slope, so we'd have to see the CT start getting above the colored ribbon and living above there for multiple days to change the negative slope on that. So as of now, anticipation is of more downside. We could possibly have bounces within that back to the upside, but as of now, tick negative, market model longer term is to the downside, and the structure still looks extremely weak into next week, as we already discussed. So again, in the money now, the money put dominated, targeting down to 4,300. Even all the way out to 42.50 was another level below us. So we'll continue to watch this and see if this changes structure after OPEX today into next week. So hopefully that helps. We'll be in the Discord in just a few minutes to discuss some other items. Everybody make it a great Friday. If you need anything, make sure you tag at admin or post in hashtag questions, and we'll be in the Discord in just a few minutes. Thanks everybody for joining. Bye.